let's talk about something that we all deal with, but probably don't think about the history of: income tax. Now, you might think it's a pretty dry topic, but the story of how it came to be in India is actually full of drama. We're talking rebellion, war, and a digital revolution that is still happening as we speak. And here's the kicker. This huge, complex income tax system we navigate every year, it started out as a temporary fix, a short-term solution that was only supposed to be around for 5 years. So how on earth did a 5-year plan turn into a permanent fixture of our lives for over 160 years? Well, to get to the bottom of that, we have to go all the way back to the beginning. And you might be surprised to learn that India's first ever income tax wasn't about some grand economic plan. Nope, it was a direct reaction to a massive nationwide uprising. The event that started it all was the Indian Rebellion of 1857. This was a hugely significant moment in India's history. For the British administration, it was also an incredibly expensive conflict. Putting down the rebellion cost them a fortune and left a giant hole in their budget that they needed to plug, and fast. So enter Sir James Wilson. He was the first finance member for British India, and he had a pretty straightforward solution to their money problem. On July 24, 1860, he introduced something India had never seen before: a tax levied directly on people's income, specifically to pay for the costs of the rebellion. And, the system back then was actually pretty simple. All income was basically sorted into one of 4 buckets: what you earned from your land, what you made from your business or profession, any income from investments, and finally, your salary or pension. That was it. A simple structure for a very specific and what they thought would be a very temporary problem. But as we know, it didn't stay temporary for long. What came next was actually a really messy and uncertain couple of decades. It was basically an era of experimentation, where the colonial government was just trying to figure out if this whole income tax idea was even going to work in the long run. And talk about unstable. Just a few years after it was introduced, it got swapped out for something called a license tax. Then, by 1873, they scrapped the whole thing entirely. The experiment was over. Or so they thought, because by 1886, they realized they needed a reliable source of money, and so the Income Tax Act was brought back, this time for good. Now, this 1886 act was a really big deal. Why? Because it brought in a concept that is absolutely central to how we think about tax today: net income. This was a game changer. It meant you wouldn't be taxed on every single rupee that came into your business, but on the profit that was left after you paid your expenses. It was a huge leap towards a much fairer and more logical system. All right, so the next major turning point was sparked by another global crisis: World War I. The war put a massive financial strain on the government, and it became crystal clear that their patchwork approach to taxes just wasn't going to cut it. They needed a solid national system. And that's what led to the Landmark Act of 1922. See, before 1922, the whole system was kind of a mess. Each province was pretty much doing its own thing, handling tax collection in its own way. You can just imagine the chaos and the lack of consistency. There was no central authority making sure everyone was playing by the same rules. The 1922 Act changed all that. It took the power away from the provinces and created a single, centralized tax administration for the entire country. This was huge. It created a unified structure that was so well designed, it stayed in place for the next 40 years. And it introduced a concept that every single taxpayer in India still uses today. And that concept is the assessment year. Now, this can seem a little tricky if you're new to it, but the idea is simple. The previous year is the financial year when you actually earn your money. The assessment year is the following year, when the government looks at or assesses that income to figure out your tax. So you earn in one year, you pay tax on it in the next. This fundamental principle comes directly from that 1922 Act. Okay, let's fast forward past independence in 1947. India is a brand new sovereign nation, but it's still running on a tax law from 1922. A law that had been amended and tinkered with so many times, it was becoming a complicated mess. It was time for a complete overhaul. Think of it like an old computer that's had dozens of software patches over the years. Eventually it gets slow and clunky, and it's just easier to start fresh with a new one. That's what the old law was like: cluttered, confusing, and just not suited for a modern, developing country. And so, they did start fresh. The Income Tax Act of 1961 was a total rewrite, designed from the ground up to be a clear, comprehensive law for a new India. It officially kicked in on April 1, 1962, And, with countless amendments since, it is the very same act that governs our tax system right now. This is the foundation of it all. This table is a fantastic way to see the whole story in one go. You see the journey, starting in 1860 with a tax to pay for a rebellion, moving to 1886 where they figured out how to fairly define income, then to 1922 where they built a national administrative system, and finally landing on the 1961 Act, the law we use today. It's quite an evolution. But of course, the story doesn't stop in 1961, not by a long shot. In fact, the most dramatic transformation of all has been happening in our lifetimes, the shift from endless stacks of paper to a fully digital system. By the time we got to the 21st century, the 1961 Act was facing brand new challenges. The old paper-based system was incredibly slow and inefficient. For the average taxpayer, it was often a confusing, non-transparent process, and sadly, it created opportunities for corruption. And the solution, of course, was technology. Mandatory e-filing moved everything online. Then came data integration, linking up the tax system with things like GST, which gives the department a much clearer picture of someone's finances. But the real game changer was the idea of faceless assessment, which aims to remove the physical interaction between you and a tax officer. And this isn't ancient history we're talking about. This huge push for faceless assessment really took off in 2020. The idea was simple but profound. By making the process digital and anonymous, you could reduce bias and cut down on opportunities for corruption. What all of this really signals is a fundamental change in philosophy. The tax department's job isn't seen as just collecting revenue anymore. The modern goal is to improve taxpayer services, to make the whole process more transparent, efficient, and, well, less painful for you. So, we've gone on quite a journey. From a temporary tax born out of a rebellion to a sophisticated digital platform focused on service. It's been an incredible evolution. And it leaves us with one big question to think about. As our world becomes even more digital, what do you think the next great tax revolution will look like?